Let's talk about life insurance. The thing you'll hope your family never has to use, but also the thing you'll sleep better at night knowing is there. Today we're diving into term versus whole life insurance. What's the difference? Which is better? Why does Dave Ramsey yell about term like it's the cure for everything except traffic jams? And why do some advisors swear whole life is the only way to build wealth? Stick around, because by the end, you'll know exactly which one makes sense for you. Now, term life is like renting an apartment. You pay for coverage for a set period, 10, 20, or maybe even 30 years. When time's up, your coverage ends, no cash value, no frills, just pure protection for your loved ones. On the other hand, whole life is like buying a house. It's permanent. It lasts forever as long as you keep paying. Plus, a part of the premium builds up a cash value like a forced savings account. Well, of course, the insurance company takes a pretty generous cut for the privilege. Now, here's where the difference hits. It's really in the cost. A healthy 30-year-old man might pay $20 a month for $500,000 in term life coverage. That's less than your DoorDash bill, ain't it? I mean, you might as well get up off your lazy butt and get the food yourself at these prices. On the flip side, the whole life is about $200 a month for the same coverage. That's 10 times as much. I mean, you could buy the term, plus a Disney Plus subscription, plus a gym membership that you'll never use and still come out ahead. Okay, let's run the numbers. Our 30-year-old buys term life insurance for $20 per month. That leaves him with $180 per month extra compared to whole life. If he invests that $180 in the S&P 500 at 10% historical average return, after 30 years, he could have about $380,000 to $400,000. That's a huge cushion. Au contraire, if he chooses whole life at $200 per month, his cash value after 30 years might be about $150,000 to $200,000. It's safer, yes. Guaranteed growth, yes, but a lot smaller. So the term plus the investment approach has the potential to leave you with nearly double the money. That's if you're disciplined enough not to blow the $180 a month on pumpkin spice lattes and limited edition sneakers.
Are you talking to me?
Okay, so here's why term life is king for most families. It's affordable, so you can buy enough coverage that actually matters. It protects you during high-risk years, when you have kids, a mortgage, or maybe even haunting student loans. Also, if you invest the savings, you can build up enough wealth and eventually not need insurance at all. And that's why Dave Ramsey preaches buy term, invest the difference. He wants you to grow your wealth so big that by the time the policy ends, your investment can take care of your family instead. And to be honest, when you think about it, it does make a lot of sense. But wait, there's more. Whole life is not just a scam. Here's where it shines. Whole life insurance lasts forever, so the coverage never runs out. You can also use the built-up cash value as a loan for emergencies. It's useful for estate planning. Wealthy families often use it to transfer money tax efficiently. It can also act as a forced savings plan for people who, let's be real, couldn't invest consistently if their lives depended on it.
What?
So while term is usually better for the average person, the average Joe, whole life has a role, especially for high net worth folks or those who want guaranteed lifelong coverage. Back in the 70s and the 80s, whole life was the star of the show, mainly because low-cost index funds weren't really available to regular investors. But since the 1990s, as investing got easier and cheaper, term life has taken over. These days, most financial gurus recommend term for the majority of the people, with whole life as a niche product for specific needs. So there you have it, folks. Term versus whole life. One's cheaper, one's expensive, one's temporary, one's forever. Neither is automatically bad. It depends on your goals. Now, while Dave Ramsey says term is the way, other advisors argue whole life can be smart if used carefully. Now, I want to hear from you. Would you rather rent your coverage with term or buy the house with the whole life? Drop your answer in the comments. I'd like to know. Disclaimer: I am not a financial advisor, and this video should not be taken as financial advice. It is purely for educational purposes. Please consult with a personal financial advisor before executing any financial transactions. Fun fact: the very first US life insurance policy was sold in 1761, and rumor has it, even back then, someone was already complaining. This premium is too high. Too high.